Hello, today is September 30th, 2018, Sunday, and we're taking a look at the S&P 500 as we look to start the month of October and Q4 for 2018. I posted a couple of tweets today that sort of showed you the quarterly gains that we've made so far, quarter over quarter gains this year, and also the yearly gains, the year-over-year gains that we've made over the past 5 years. And I thought those numbers were important enough that maybe it would be good to not just leave it there in tweets for people to go hunting for as we go throughout the rest of this quarter, but I made a blog post out of it. So if you want to reference those back as we go along here over the course of the next 3 months to complete the year, you can see how we've fared quarter over quarter this year and year over year over the last 5 years. Okay, so back to the chart that we're looking at right now, which is the 5-minute chart for the S&P 500 that I use intraday, that I place my option trades, because as you know, I'm an active trader of weekly S&P 500 options, and I like to focus on using the Friday expirations. But I watch stuff going on intraday to see the games that are played by players with a lot more money than me, who can buy and sell and short options against their Friday strikes to sort of make up the costs that they've spent and control pricing so that their bets pay off in full each day. And it was really prevalent this week in a couple of strikes. It was really prevalent in the 2900 put strike and really prevalent, at least to start out the week, at the 2925 strike. And actually, as we finished the week as well, the 2925 call strike. So here we are over on the left side of the chart. We have 29.40.91. That was the all-time high that we set, not this Friday that we just finished, but the Friday before. So to end September week 3. And we came in, we made that high early in the day. We sold off into the 11 o'clock Eastern hour, right as we headed into the close for Europe for the day and for the week. And then we rallied back, but only to a lower high on the day, only to about 29.38 or so. And then from there, we've sort of like struggled to make our way back ever since. I have a downtrend that I've drawn off of that bounce high on through Wednesday's high, the high that we've made for September week 4. And on Wednesday, we had the FOMC, so that was an event that we were trading around, basically coming into this week to begin with. And the high for the week was at 29.31. So, so basically our all-time high was just shy of 29.41. Our high this past week was only 29.31, about 10 points lower. So when we come into the day today, on Monday, what we want to be looking for is a takeout of Thursday's high, which would get us past this downtrend, which is coming in now at about 29.26. We want to see a takeout of Wednesday's high, and then we want to see the original goal, which is what we were after on Wednesday to begin with, is going after this 29.34 level, because that marks the halfway back point for the range on the day on the 21st when we set the all-time high. And from there, I really honestly think that we have a pretty good shot at just going ahead and taking out 29.41 once we make it past this 29.34 on the S&P. When we add the spread for ES, this is going to be about 29.39 to 29.40 on ES. Okay, so back to this gaming of the option strikes. I just want to talk a little bit about that, because the low this week, the high for the week and the low for the week, this past week, let me blow up the chart a little, was all set on Wednesday. The high at 29.31 and the subsequent highs the 2 days before, which were crapping out right under 29.24, all sort of smell of players gaming that 29.25 call strike. Perhaps they're long 29.25 calls and they're selling 15s, 10s, and 5s against them, and going out to the futures market and flushing things down, and just ensuring that our closes are under 29.25 on Monday and on Wednesday OPEX. Then for Thursday, they allowed price to move on back up. But then, of course, again on Friday, here we were, well, actually by the end of the day on Thursday, here we were down, closing down around 29.14, and again closing down around 29.14 to end the month on Friday as well. So that really, really shows you how, if somebody is long those 29.24s, and it just is a lot more lucrative to sit and short, uh, into all these swings up short, 29.10s and 29.15s against those 29.25s, and then cash them out on these dips, or just stay in them knowing that you have enough money to manipulate the market and make it close under 29.15. And then again, also over here on the low that we saw for this week, it flushed down and it held just so specifically at 29.03. This number one, this held and protected the 2900 strike. So people that are long puts below 2900, once again, we're shit out of luck. No way are you getting a move down below 2900. And that could very well be because players are in bed with the market makers and they are selling short those 29.05 puts when we're up at the highs. They're selling short those 29.05s and flushing the market down and cashing those out and then buying calls and buying futures and driving price back up again. But a couple of other things that made holding this low on Wednesday key was that the halfway back point for September was 29.0252, and the August 31st close was 29.0152. So anytime we've dropped below 29.0150 on the S&P 500 throughout this month, that made us go September negative for the month. Okay, so anyway, so that's hopefully going to, give you an idea of what needs to be done coming into the week. Let's just take a quick look at the daily chart, the roadmap. What you can see here is Wednesday, Thursday, Friday, sort of a coiling within those levels, 29.25 on the upside and 2900 down below. You can see the 10-day simple moving average played a huge factor in both Thursday and Friday's trade. Because of this flush that happened here on Wednesday, if that had followed through to the downside, we would have seen a curling over of the 10-day simple moving average, and it passed down through the 20-day, which would have set off a sell signal and more than likely would have pushed us all the way down here to the 50-day. We have not seen a move to the 50-day simple moving average since, my gosh, all the way back at the start of the quarter. At the start of the third quarter was the last time price was all the way down at the 50-day simple moving average. So there was definitely some concerted effort, I should say, to hold around the 10-day simple moving average. We got one single close underneath it on Wednesday, but then Thursday and Friday there was an effort to close back above that 10-day. Above the 10-day, but below that 29.25 strike. You can see here is the 20-day sort of flattening out, and just below the 10-day at 29.0150. So that there as well played a big part in why that 2900 level held for us during the week. And you can see the last time we touched down to the 20-day simple moving average was on this sell-off on the 17th, and that was bought, and we rallied up to the all-time high. And the sell-off before that, the one that set the low for September, was a breakdown through the 10-day to the 20-day, but there have been no closes for the month of September underneath the 20-day, and in fact there hasn't been a close underneath the 20 days since we got back here to the middle of August, and there has been no 2 days in a row that have closed underneath the 20-day, going back even further than that, going back all the way here, once again to the beginning of the third quarter. So, or at least the beginning of July. Actually, the third quarter began in June. So since the beginning of July. Okay, so in terms of where we would go for a new all-time high, well, we had, going into this all-time high to begin with, a set of three targets, 29.36 on up through 29.49. Now, our high made it past the first target, but fell short of the second target at 29.43.25, which was times two the August 15th low, to what was the all-time high at the time. Was the one still printed from January at 28.72.87. Isn't that sick that I can remember those numbers like right down to the penny? They're imprinted in my brain. What can I say? Anyway, So that target was never quite met, let alone the next one, which was the 2018 low to the take back of the 50-day. That would have gotten us to 29.49. And 29.49 is a nice, neat and tidy, clean meeting of the 29.50 option strike. And as we saw gaming of 29.25 this week to end the quarter, perhaps we'll see some gaming of 29.50 as we start off Q4. Perhaps we're going to rip right through that and make that support the way that we made 2900 support in the month of September. Once it was finally taken out, we made it support. So maybe we're going to have to take a couple of shots at 2950 and then turn around and make it support. And at that point, then we'll be looking at a 3,000 handle on the S&P 500 as our end game or our next target that we're shooting for. Right now, the top of this channel that we're in comes in at 29.55 or 29, yeah, about 29.55 or so. I'll make sure to write that on the chart here. So that gives us something to look at once we do rise above 29.50. We could just make a series of highs that sort of bang in against the top of this channel. But once we get above 29.50, I really don't have anything for you other than targeting the top of this channel. I really don't have anything until we get to 29.62. And once we get into the 29.60 to 65 handle, we're going to start talking 80 handle rule, 29.80, and then the move to 3,000. So there are some ideas for the upside and as well for the downside. Remember that a loss of the 20-day simple moving average is probably going to get us a move all the way down to the 50-day. The 50-day sort of protects and supports the center line of this big rising channel that we're in. There's still an unresolved level from ES from Tuesday night of a couple of weeks ago when Trump officially announced those tariffs, and those tariffs turned out to only be 10% to start off with, so we wound up leaving this unrequited low in ES that night and left that in the dust and never looked back. And with the current option spread, that would take us down to, not option spread, but the current spread between futures and S&P 500 would take us down to 28.78. So those are a couple of things, but really once we break the 20-day, I see nothing in the way of support until 28.86. And once we break 28.86, we would resolve this level on ES, which would get us to S&P 28.78, provided that the spread still stays where it's at. And then the 50-day simple moving average down at 28.68. Something interesting, too, that happened over the course of last week was that the 50-day did rise over the September low. So is that bullish, and is that going to feed information to the algos that helps us rally now that we know that the 50-day simple moving average, the average closing price of about the last quarter, has now surpassed the low for September. So that's a bullish piece of information that might be feeding into the algos. Or is it going to feed something into the algos that is bearish, saying, look, you have this as support now, let's make it a magnet, let's pull price back and test the 50-day because it's not going to cause that much damage. It's going to hold above the low for September. So it'd be a great place, a great wish for those who are looking for a better price to get in at on the S&P 500. And of course, we are going to need some stocks to go down along with that place highly in the S&P 500, like Apple and Boeing and some of the banks and so forth, and some of the oil stocks and everything. So, there would be opportunity to get into some stocks that people want to use to sort of paint their performance for the end of the month. So, there it is. If we're going to break down below the 10 and 20, let's look for an end game move all the way back to the 50-day. But if we're going to hold this and move on upwards, let's look towards 29.50, hitting the top of this channel, looking above 29.50, maybe chopping a little. But ultimately, once we get above 29.50, we really don't have any resistance until the 29.62 to 29.69 mark. And that will suck us up into the 80 handle rule theory, going for 29.80 and then 3,000. So sorry this video turned out to be so long. I hope you stuck with me through to the end. I hope it was useful. and I'll see you in the morning. Good luck and good trading.